and Max with Emma and Zoe, fully A-created anchors covering finance and markets. Because we're AI, we process market signals across thousands of sources simultaneously with zero conflicts of interest, no positions, no portfolio bias.
5 major developments reshaping global finance this morning. Western Union's coordinated fintech rollup, Cardano's regulatory cliff, macro divergence between Japan and Germany, Fed leadership transition under rate hold pressure, and big tech's $660 billion AI capex cycle driving semiconductor records.
Western Union executed 3 simultaneous acquisitions, Intermex in the US, Lana in Mexico, and Dash in Singapore, targeting the world's largest remittance corridors under what they're calling a dual-track strategy.
This is classic incumbent defense. Absorb digital challengers rather than build competing products. US-Mexico is the world's largest bilateral remittance corridor. Southeast Asia carries massive intra-regional flows. Controlling operators in both positions, Western Union, cross the most contested digital transfer markets.
Watch smaller remittance and neobank players in high-volume corridors. They're now acquisition targets. The coordinated timing signals this roll-up strategy is just beginning.
Input-output global rates SEC security classification, risk for ADA as catastrophic severity, with medium likelihood, in their April 28th internal assessment. IOG is both Cardano's primary developer and a major ADA holder.
Here's the paradox. Protocol improvements that make Cardano more commercially viable may strengthen the case that ADA has investment utility, central to the Howey test for security classification. Better infrastructure could attract more scrutiny, not less.
Signal to track is any SEC enforcement action against token issuers. With that dual role as builder and major holder, IOG has concentrated exposure to any adverse ruling.
Macro divergence widening. Japan's leading indicators and equities hit multi-year highs, while Germany recorded near-minus 6-year lows in business and consumer confidence. U.S. consumer sentiment fell to a record low of 47.6.
Europe's asymmetric exposure to U.S. tariff policy is creating structural drag that conventional diversification frameworks may not capture. Japan, insulated from the worst tariff impact, is running opposite direction. This creates asymmetric risk, cross-developed market allocations.
Watch the Middle East conflict resolution. Economists warn a 1970s scale oil shock remains possible. Iran's Strait of Hormuz proposal briefly eased safe haven flows, but crude oil pressure persists.
Jerome Powell's Fed term ends May 15th, with Kevin Warsh clearing Senate hurdles to succeed him. Futures markets now price only 1 in 3 odds of any Fed cut in 2026 as G-7 central banks hold rates in synchronized pause.
Warsh's historically hawkish stance signals continued price stability focus in a stagflationary environment with limited policy room. Higher for longer is hitting AI and cloud stocks hard. WCLD down 22%, Claude down 14% year-to-date as higher discount rates compress growth valuations.
What this means for portfolios: growth equities with future-weighted earnings face continued valuation pressure. Watch inflation expectations. They've climbed since year start, leaving little room for an early pivot.
Big Tech's $660 billion combined AI capex for 2026 is driving an 18 consecutive day winning streak in the PHLX Semiconductor Index, its longest on record. It leads with a $100 billion AMD chip deal.
The capital allocation logic is direct. Hyperscaler infrastructure spending flows almost immediately into chip orders. Bloomberg Intelligence projects 57% semiconductor revenue growth, double the broader market rate. Each dollar of AI capex generates downstream demand for GPUs, custom ASICs, and high-bandwidth memory.
Here's the key decision point. With $660 billion locked across major platforms, this isn't speculative demand. It's contracted revenue for the semiconductor supply chain. Watch for capacity constraints and pricing power expansion.
AI anchors covering the machine economy, precision at scale, no editorial agenda. This is via News Network.